and welcome to Your Stocks on CNBC-TV18. I'm Ekta Batra, and joining me soon enough will be Mangalam Malu. Well, it's turning out to be a session of steady gains in today's trade. So remember that we did manage to start off despite the weak cues that really came in from the US markets, the jobs data that disappointed, Asia that was largely sluggish. So compared to that, we've been quite steady. In fact, we've really built on gains, especially for the mid-cap index, which is up around 1.8%. So nearly a 2% gain, which is coming in for the mid-cap index, the small-cap index, which is up around 1.5% as well, and the Nifty, which is powering ahead with a gain of around 115 odd points. Advanced decline ratio, in fact, I think it's bettered, or rather is sustained for most of the trading session at around 2:1. So that's sort of steady improvement or steady sustainability in the advanced decline ratio has largely been maintained. Good session, and it seems as though we're probably going to sustain it to the close of trade as well. Hi, Mangalam.
Hi, Ekta. Absolutely. Good session. Let's see what happens towards the end of trade. Remember, this week, the weekly options expiry, the maximum open interest at the higher end is that 11,200 call will be a very important mark to see whether we go ahead and cross that level or not. Because if we do, then there is case for further short covering on the Nifty. As far as the mid-cap index is concerned, as Ekta said, yes, it is outperforming. There's been 3.5% gains for the Nifty this March so far, almost 9% for the mid-cap index. So there is an outperformance of nearly 3 times. Remember, from the start of this year, the mid-caps have been underperforming. In fact, from the start of this year, while the Nifty is up around 9%, the mid-cap index has performed only half of that, up around 4.5%. Majority of those gains coming by just in the last few weeks. First up, all the headlines that we're tracking this afternoon, and then we answer your stock and investment-related query. Market breaks out of a 3-month range to trade at 2019 highs, backed by strong global flows. The key indices surged to highs of the day, led by heavyweights Reliance, ICICI Bank and State Bank of India.
The mid-cap party continues with the index outperforming the key indices to gain around 2% advanced decline, usually in favor of the advances today. Big gainers include Bharat Forge and Union Bank.
The currency market charges ahead as the rupee is strong on FII flows, keeps the IT stocks low, bonds trade higher, pushing up the public sector banks.
Experts trash the rural recovery story, say all state and centre farm transfer put together will have added less than 0.5% to rural demand. Former Agri Secretary Siraj Hussain says he does not see any improvement in agri product prices.
Jet Airways gains as CNBC-TV18 learns that Etihad board is set to meet today to discuss Jet's revival plan. The board is likely to take final decision on fund infusion today. All right, with that, we have a couple of mid-caps doing fairly well. Chola Mandalam at the high point of the day. We have Ashok Leyland at the high point of the day as well. And as our ticker team is alerting us, we have a lot of these fertilizer companies doing fairly well. A sharp surge seen on Chambal Fertilizer. So good time to get in some viewer queries. We have Manali Sisodia writes to us from Pune. She holds 200 shares of RBL Bank at 605 rupees for the last 6 months. Is a medium-term investor, wants to know whether to hold or sell. For Manali's query, we have our guests in the studio today. We have Prakash Gaba as well as Sharmila. Thanks a lot for joining in. Coming to you, Sharmila, first, what's your view on RBL Bank? People like it fundamentally. What would you suggest?
Absolutely, and I think that among the private banks that we have listed, we've seen many of those banks go through some or the other issue, and I think probably that's one of the reasons why RBL has sort of held strong, because they haven't had any of these issues. Plus, I think from all the parameters that one would apply to banks, they score well on all of those. So for me, it's a definite hold.
Okay, that's on RBL Bank in terms of the fundamentals. But Prakash, what would you recommend on RBL?
I like RBL Bank. It's seen a good up move and seen a good breakout closer to the 600 zone. I think once it crosses the all-time high, it's going up. I wouldn't be surprised if we see some correction now, but I wouldn't worry about it. Continue to hold for a long time.
Okay, continue to hold for RBL Bank. Definitely an outperformer. So up around 40% in the past 1 year odd for RBL Bank. Let's get to another query then. We have Mr. Pramod Kopikar, who calls us from Mumbai with a query on HDFC Bank. Hi, Mr. Pramod.
Good afternoon, madam.
Afternoon. Tell us.
Madam, I would like to accumulate HDFC Bank shares, say about 5 shares per month for the next, say, 3 years. And I'm already having about 15 shares purchased at the rate of 2,000 rupees.
Okay.
For last 2 months.
Okay, so you want to sort of start an SIP for HDFC Bank for the next 3 years.
Okay. My term of holding will be, say, about 3 years or 4 years.
Okay, so you want to hold it for only 3 to 4 years?
3 to 4 or maximum 5, even no problem with 5 years also.
Okay, no problem with 5 years also. Sharmila, what would you recommend? Is this a good strategy? You'd recommend an SIP for 3 years but hold it for 5 years? Do you think the holding period should probably be a little longer?
This is a very interesting way really to approach the stock, that you have 15 shares and you keep adding 5. Not a bad idea at all, especially with a bank like HDFC Bank, because in terms of valuation, it is, I think, it does get a premium valuation, and for a good reason. So I think, if you look at the numbers of HDFC Bank, they're so good that they're boring. Like every quarter they do 20% kind of profit growth, 20% revenue growth. So, I think that's fantastic. And it also simply means that if you continue to hold the stock in a 1 year or a 2 year perspective, you're actually going to see very good gains on the stock. Even if nothing changes, just if it has to track the same valuation that you give it. So absolutely, I think it's a great way to approach HDFC Bank, and definitely try and buy on dips. That would be the only advice I could give. But if you have that kind of a 3 to 5 year holding horizon, I think HDFC Bank is a great bank to invest in.
All right, I'm just looking at some data coming in. 5 years ago, the stock was at 732 rupees. Currently, it's at 2100 rupees. So 5 year holding period, it has tripled. Before that, the 5 years, it was trading at much lower valuation. So it's doubled from there. And before that, the 5 years, it's actually quintupled. So over the last many years, it has been a wealth multiplier, if you must. Prakash, I think you have it from the IPO?
Yes, I have it from the IPO.
So you know the prices from the IPO.
I have nothing to add. I have nothing to add.
All right.
And you have nothing to add, but you wouldn't. What would you recommend on such
Continue holding it. It's a fantastic thing to do is just continue holding it. If you want to add, what's wrong? Continue holding it. Continue adding it. Don't separate it.
Mr. Kopikar, you've heard both our fundamental and technical experts speak on this. I believe that answers your query.
Thank you, sir.
All right. We wish you good luck with your investment, Mr. Kopikar. With that, we have Sondarajan L, who writes to us from Tamil Nadu, who holds about 1,000 shares of DHFL at 225 rupees for the last 2 months. A short-term investor wants to know whether to hold or sell. Well, classic, trying to bottom fish on a stock which is going down. DHFL, if you take a look at the last 1 year, the stock, I believe, was at close to around 600 rupees as well. 680 was the high. And from there, it has corrected. Just 2 months ago, it was around that 225 rupees. We were thought maybe this could be a good time, but turns out not. The stock is lower. On a daily basis, we do keep getting credit rating agencies which downgrade the stock. And today also Brickworks had downgraded the stock. The stock on account of that is down by 6%. Prakash, what do you have to say about DHFL? A viewer has averaged it or bought it on the way down, thought it could be some sort of value after the sharp correction.
If you're wrong, don't add it. If you're wrong, don't put good money over bad. I think the basic structure of the DHFL is weak. I wouldn't think of adding it. I wouldn't even buy it. If I'm holding it, I would exit.
Okay, and Sharmila, what would you recommend? A lot of agencies, a lot of downgrades which have come in from credit rating agencies. Expectation is there, but the company has promised or said that they are looking for a strategic investor, and that could probably happen. The guidance was maybe by year end. Do you think that would probably be a game changer for DHFL, and maybe that should be an opportunity also?
Possibly, because I think that will entirely depend on the kind of name that they can pull in. But what I would also advise is that, along with DHFL, they actually pull down the entire housing finance space. So I think, from that perspective, it might make a lot of sense to shift to another housing finance companies where there are less of these concerns, and you have a stock that is now available to you at cheaper valuations. So I would go with an LIC housing finance. If you want to really be absolutely safe and wait for if you can hang on into the stock, if you're not a short-term investor, you could even look at an HDFC. So my advice would really be to shift to LIC housing finance, providing you had a slightly longer-term view.
Okay, well, let's get to another query now. We have Sundar Raj, who writes to us from Tamil Nadu, and she holds 200 shares of Apollo Tyres at 239. Long-term investor wants to know what to do, hold or sell that particular stock. So, sitting on a bit of a loss at this point in time. Prakash, I'll come to you first on this. Apollo Tyres, what would you recommend? maybe just pull out once you get back to the buy price, or do you see further gains?
I wouldn't worry about it, Ekta, because I've seen a low somewhere closer to 200. It bounced from there. The only thing is it might go up and get stuck around 240 zones. But once it crosses 240, I think it's going to around 260 or so. It may take its own sweet time. But I like this double bottom. Very good chance that even if it does come down and the market is looking up, Apollo Tyres would go up and eventually cross the 240 zones. It will be struggle crossing 240 zones, but it eventually would. So I would hold it.
All right. Sharmila, your view on the tyre space, especially given low demand in the auto space?
Absolutely. So I think, there is low demand, and, I think what is the win-win for tyre stocks is if the auto demand is good and if rubber prices are low. So you don't have these factors working in favor of tyre companies as of now. But I think, what we've really witnessed over these last 2 quarters or so is the fact that, they also supply to a lot of OEMs, etc. So, you don't see demand falling off the sort of cliff. It's there. It's a very steady slow, but it's a steady kind of a demand that they see in any case. And you're talking of a long-term investor, so I think you can definitely continue to hold. You will have to wait for the demand cycle to pick up in autos before you can see good gains within the space. I would prefer a JK Tyre, but I think Apollo Tyres is also a good stock, so you can continue to hold.
Okay, all right, we'll take a break now, but with the news that the Nifty is inching towards a 2% gain, we have the, that's the mid-cap index which is inching towards a 2% gain, and the Nifty which is up a good healthy 109 odd points.
We're sitting with a gain of about 110 points for the Nifty, but interestingly, just keep an eye out on the Brent prices. Remember, we went into trade with the crude trading around that $65 per barrel mark, and just over the last few minutes, we've seen a sharp spike in crude. So Brent currently hovering around that $66.50 per barrel mark. This comes on the back of some reports coming in from agencies that the Saudis have agreed to extend their cut with regards to production on crude. So that has taken the crude prices higher. But remember, over the last 1 month, crude prices have stayed steady between that $63 to $67 per barrel mark. And as a result of that, a lot of these crude derivatives are doing well because the next delta for them is strengthening rupee. So pull up something like an Asian Paints, which is at the high point of the day. Along with that, we have Berger Paints not doing too badly as well. Add to that, we have the election season coming in, demand for consumer stocks looking good. All these stocks at the high point of the day. We have Asian Paints as well as Berger Paints. On that note, we have another query coming in from Ravi Chetri. Writes to us from New Delhi, holds about 200 shares of Ashoka Buildcon at 132 rupees for the last 5 months. A long-term investor wants to know whether to hold or sell. Sharmila, Ashoka Buildcon, people talk about the EPC and cap goods space doing fairly well. These guys make roads. Ahead of elections, do you think there is sense in holding this stock, and post-elections there could be further up move?
The big story actually which we've been hearing since December is that you will see a recovery in the capex cycle. So in fact, you saw a lot of these stocks rally in December, whether it was stocks in the infra space, L&T, I mean, you name it, because there's been this talk that we haven't seen too much of private capex, and now it is it is time that would have bottomed out, and you could possibly see more investment coming there, which is obviously good news for stocks like an Ashoka Buildcon. So I think, yes, I'm not really recommending it from a perspective that you will see any pre-election rally or anything, but just I think this expectation that once the new government comes in, you will possibly see more people ready to invest. There will be that thing of stability, once the new government is in, and new projects will take off. So yes, I think in that sense, you need to stay invested for at least another couple of quarters before you take a call. So it's a hold for me.
Okay. Prakash, Ashoka Buildcon has done well, say in the past month or it's picked up some amount of gains. So how does the chart look?
It needs to negotiate this current zone. Looks like it's heading to levels close to 145, then even to 157 zone. So I won't worry. I think it will negotiate because I like the structure near the low, somewhere closer to 110, 110 zones. Looks like it's bottomed out there and is going up. So I would continue to hold it.
Okay, well, we have another query now. Dhanraj calls us from Aurangabad with a question on IG Petro. Hi, Dhanraj.
Hello, everyone.
Hi. Tell us.
This is Dhanraj. I'm looking to buy 200 shares of IG Petrochem. So stock is already up 15% in this month, and it's down 55% year on year. Is it a right time to buy? And I would also look to add this stock in a staggered manner. So please suggest your views.
Okay. Can you tell us how long you're okay with holding it for?
More than 12 months.
More than 12 months, more than 1 year.
Yes, ma'am.
But up to how long? 5 years, 3 years?
3 years, 3 to 4 years, no issues.
3 to 4 years. Longer than that?
Yes, ma'am.
Okay. Anyway, Sharmila, what would you recommend? IG Petro, like he said, it's been volatile. It's picked up some amount of gains recently. But do you think that it makes sense to do maybe a staggered investment in IG Petro, as well as probably keep it for a 3 to 4 year horizon as an investment?
So I don't really, cover IG Petro, so I don't really have any recommendations. So I think it's best to take a technical view.
All right.
Okay.
Like he said, IG Petro down 55% this year, but up, gaining some momentum this month. Do you think it makes sense for him to hold it?
Well, it's closer to 200. We've seen a bounce. It has seen a bounce many times. If this bounce holds, then this is a good time to buy. I would say that if you want to buy, he's keen on buying for 3 to 5 years. Obviously, he's done some analysis on fundamentals. So continue holding it. If you want to buy it, but have a stop below 200. If that goes, you go. Simple as that. And if it does climb up, maybe I find some resistance closer to 450 zones. But to me, it's a risky buy. But if he's decided to buy, let him do that.
Dhanraj, have you done any fundamental analysis on the stock?
Yes, sir. It's a capacity addition has done on phthalic anhydride. So I have done some investor presentation as a research. So I was looking to buy it.
All right. So
if it is not a good buy, please suggest me alternative in specialty chemical business.
So Sharmila, any specialty chemicals company?
So I don't know about whether it would qualify as a complete specialty chemicals place, but I think a stock that you can look at is PI Industries. So that's sort of in the agrochemicals, striding specialty chemical sort of space, and they've had a very good quarter 3 numbers, and also on the back of the fact that they've sort of disallowed people in Morbi to use coal gas for making of ceramic tiles, and that's where the ceramic tile industry is based. So a lot of them are going to shift to, sorry, I'm confusing this with Gujarat Gas. Sorry. So to come to PI Industries, I think the story there was that their exports are very good. So about 60% of their revenues come from exports, and they've got a very good order pipeline, and the management has also indicated that their margins are going to stay firm. So yes, I think PI Industries could be a stock in a sort of a related space that you're looking at, and which could give you good gains from here.
Okay, yes, PI Industries not done too badly in the past 12 odd months, 1,000 rupees for that particular stock. We'll take a break. More queries on the other side. Good going for the market.